in options also. So
What was that, Mac? You
I
started
said
with?
I dabbled in options also,
Okay.
but I didn't know how to get out when I got
Sure.
closing it out.
Okay. So, Mac, how old are you, bud?
um, I'm 62.
Okay. Yeah, you should absolutely never touch another penny stock for the rest of your life at your age. And Mac, do you have a 401k, IRA, cash account, maybe all three like I do? Okay. And all right, guys. So yeah, just real quick, guys. Back a long time ago, I lost a substantial amount of money in a high risk microcap stock, and it's part of what
Hello, can you
got
hear
me
me?
to buy the SPY. And I'll tell you guys, it's been the least stressful investment I've ever had. And then basically, Jason and I created this system, and now I can sleep even better at night because I know, my largest holding in my portfolio is absolutely protected at all times. Okay.
Mm.
Um, and it's so nice just not to worry about it, right? Smooth out the wave, and I tell a lot of people this, but I absolutely hate to lose money more than I love to make it, and it's just been so true for me. And I'll tell you what, ever since I've been defensive, just overall with my investments, I've just been so much more consistent, been less stressed, and I've really kind of found a better place in my life. And I hate the stress of losing money. Just absolutely kills me. All right, guys. So I'm gonna challenge you all to unmute your microphones. Let us know where you're calling in from. Uh, Dan, Oscar, thank you for joining us here today, guys. Dan and Oscar have been with us for a while. I think Oscar's and then we got Tom Sharp in here. He's been with us for quite a while. So if you guys want to ask them any questions about what we've done, how they've done with their portfolios, please feel free to do so. Tony's been in here for quite a while as well. But please feel free to ask any questions, guys. Okay, let me see. That was the trailer text. Okay, cool. So trade alert will be coming out in just a moment here, folks. We are looking to risk 50 cents to potentially make 450 while the market pulls back into Monday. Okay, and just take a look at things. Oscar, while you're on here, and Tony and Dan O'Connell read something incredibly interesting. Had a paradigm shift in the financial industry yesterday. The banks, get this, guys. The banks make more money now on fees than they do on their loans. Okay, that was the synopsis, basically, of all the tier one banks that have reported earnings. Okay, literally, banks are making more money now on fees than they do on loans. Paradigm shift, first time in history it's happened. So just pretty interesting. I was covering that this morning. All right, Michelle, it's your first time in here. Thank you for calling in. Please feel free to go ahead and unmute your microphone. Let us know where you're in from. Mike Hogan, I know you're calling in from Denver, and I know you're working, so I'm not going to ask you to unmute your mic. Tom, are you calling in from San Francisco this morning? Mac, where are you calling in from, bud?
Oh, Atlanta,
Very
Georgia.
nice. Okay, cool. And Randall, let's see here. It looks like your first time joining us here today. Randall, if you don't have a microphone, feel free to just type into the chat. Let us know where you're calling in from, guys. It looks like in about 5 minutes, we're going to go ahead and take the trade alert, publish it to you all. We'll go ahead and type it into the chat box here. We text message it, we email it out, and then all you have to do is replicate it with your account. Okay, guys? And before Jason gets started up here, I'm just going to put my our whole team's contact information up here. But just call us if anyone has any questions, okay? And all of our contact information is up here, okay? Oscar says, top of the morning, Dean. Thanks, Oscar. Appreciate it, bud. Randall says from Mobile, so I'm assuming that's Mobile, Alabama. Hey, Tom, where are you calling in from today?
I'm from San Francisco Bay Area, the east side, and
Okay,
I'm just listening and learning.
Awesome, Tom. How did you do from Wednesday to today on the SPY?
I think I'm up just a little bit. I haven't tallied that up yet, but it
Okay.
just keeps going up slowly.
Okay, perfect. And let me just take a look here, folks. Let me take a look at the markets. Okay. So we got NASDAQ is down 0.14%, Dow is down 0.63, SPY is down 0.26, VIX is currently up 1.3%. Let's take a look at bonds. TLT is up 1.32%. All right, and that is interesting because TLT and metals were pushing up yesterday when the market was actually up. So now that they're pushing up a lot more than the market's down. To give you guys an example, SPY's down 0.25%, TLT's up 1.33%. So that's protectionary stuff is doing its job and getting its risk on bid. Okay, let's see here. Take a look at sectors really quick, guys. Consumer discretionary is one of two sectors, or there's a couple that are just trying to pop up. Consumer discretionary is up 0.14. Consumer communication services 0.2 or 1.2. Industrials 0.02 and utilities 0.1. IT is negative at 0.01. Financials negative 0.01. Energy negative 0.04. Consumer staples negative 1.4. Real estate negative 1.6, healthcare negative 0.20, materials down 0.25. So no major movements. And it's interesting is watching the energy sector get its first bid of the entire year. Well, really its first actually on Tuesday. No, I'm sorry, Wednesday was the XLE's largest update it's had since December of 2018. So it was kind of find that interesting. Was taking a look to see if that was going to continue. And let's go ahead and just look at that real quick and see if we did get that continuation in XLE. I haven't checked today yet, but nope, not getting it. But yeah, we saw a big push on Monday. So I was seeing if, a lot of times guys in the market needs to push into new highs. You need to see a rotation from the worst sector, right? I thought we were going to kind of see that potentially on Wednesday, and it looks like that's broken down quite a bit. But if you look at the XLE ETF, I mean, look at an ETF that's just been crushed. If you look at it kind of on a 3-year basis too, it's down substantially. So interesting. Okay, guys, it looks like the text may have just hit. Let me see here. Okay. All right. Yep. The new trade alert just hit my email inbox. Let's see here. It just hit my text messages as well. And Ryan will be posting it to the chat just here in a moment, folks. Okay. And ask and you shall receive, guys. The trade alert is in the chat box there. So I'm gonna go ahead and take a minute to let you guys go ahead and replicate that trade. This is gonna be our protection and engineering from today until Monday on our SPY position. So guys, we have some really juicy information for you today in regards to coronavirus. You get a lot of information from the U.S. government on, when things are really starting to get a little crazy. And Jason was absolutely on that this morning while I was talking to customers. So definitely look forward to more in-depth insights into that. And it's pretty interesting, guys. Let me just touch on this real quick too. And we saw the biggest jump in confirmed case counts that I've seen, over 6,000. From this site I was looking at yesterday till this time today, death toll jumped up quite a bit, and Jason will be covering that in great detail. All right, guys, and just real quick, take a look at some of the testimonials we've received. Pretty cool, guys. It's for us, it's really kind of all about the protection. And Gary's funny. He was in here earlier, but he doesn't seem to be in here at this time. But he actually left us a really cool testimonial. So if you guys get a second, take a read, and then I'll go ahead and post this this testimonials link in the chat box here today. So, and Jason, Bud, whenever you want to go ahead and take the reins, please feel free.
Okay, great. I am ready. Let me flip over to my screen. Welcome, everybody.
Hey, Jason, how are you, bub?
Doing great. How are you doing?
All righty. Question.
Yes, sir.
I had the 335 call 30 put February 7th. Am I wrong?
Oh, man. Yeah, no, that's correct. Sorry.
So we've gone inverse now.
The inverse is correct. The error on the text. Let me get a fix on that text. I don't know what the hell
Keeping you honest, man.
Thanks, Oscar. I haven't actually had a second to review it, so I appreciate it.
The return is correct. I don't know what on earth happened. I'm gonna resend out the text. The pictures look correct, so that's just a type on my end.
So was it the exit, Jason, or the entry?
The exit had the wrong strikes. Yeah, we're going inverted just with a very safe trade. Let me get this on my screen here.
Okay, guys. So in the most simplistic form, simply exit step one. Okay. And then once you've exited step one, go ahead and replicate step two.
Yeah, I got it right in the picture. I'll pull it up right here. Can you guys see the screen all right?
Thanks, Oscar. Appreciate it, bud.
I don't even know where those numbers came from. My apologies on that. Yeah, we had a nice little profit. We're trying to lock in this gain. Unfortunately, we missed a big piece of the move this week, but let's see. Does my screen look good, Dean? I lost one of my monitors.
Yeah, it looks great, Jay.
Okay.
All right, guys. So you can see the trade ticket up here. All right. And in the most simple form, like I said, guys, just exit step one. Okay. So buy to close the call and sell to close the put for step one. And then go ahead and replicate step two.
Yeah, so let me go through the trailer here. We are risking 0.15% over the weekend to gain 1.3% max on Monday. And so here's the bottom line. I've picked up a tremendous discrepancy in what the case count should be right now versus what's being reported. And all you have to do is simply look at all the cruise ships that are being quarantined and pulling off dozens of people a day with the sickness. And you can tell that these numbers are significantly underreported. Tomorrow, if you're in our boot camp, I'm going to send you out 3 videos. One is from the House. It's a 2-hour hearing. That was a public hearing where they talk about the coronavirus. Government's freaking out. They wouldn't let the U.S. scientists into China for over a month as this was breaking out. The Chinese scientists apparently snuck the DNA genome of the virus to our scientists against the Communist Party's will. They're starting to talk about whether we should be quarantining more in America, keeping kids home from school. All the officials that work for these health agencies are screaming, "Oh no, that won't help anything," although that's exactly what China's doing. And so my expectation is on weekends, we have a high risk of the bad news being pushed into Hey, Dean, would you mind muting yours just unless you're going to talk, that fan's still going. We got to get that new setup rolling this next week. Okay, so yeah, I expect that the numbers we see reported here are going to significantly jump after the market closes and potentially some more official news coming out that the situation is getting more risky for markets. So that's one big thing I've noticed and why we're placing a rare bearish trade. 2, we're right at the top of that technical channel, and there's really no good news from here. 3, the Fed's balance sheet, as expected, did not increase. And again, if the government can sell its debt because there's a crisis, the Fed's balance sheet won't grow. And sure enough, it didn't grow as we expected. Here is some data. They've done very little data to update. They're tending to do this towards the evening. But when they do update it, I believe all of these numbers are going to double. And again, that's just from the infected cases from cruise ships that are currently being docked off of the shore. A cruise ship's getting evacuated in New Jersey right now. And it does look like this is going to become a bigger and bigger problem in the upcoming weeks. Next thing I want to point out is if we do track the all other data from Johns Hopkins, it's still growing at an alarming rate of over 10%. So I think we're seeing these big countries slow down the data released today. Hey, Ryan.
What's the trailer?
Let me look on Telegram. Okay, sorry guys, we're getting that fixed trade alert out right now. So we've got a lot of things happening. One, underreporting of the virus, which I believe will be updated over the weekend after the market closes, and I think that's going to create a scare. 2, the Fed's balance sheet has stopped increasing because we're successfully selling our debt. And then 3, we have a period of time where it's actually in the government's interest to have some volatility in the stock market to drive action into our treasury market. So our Fed's currently buying up the short-term debts, which is the T-bill section right here. What they're not buying is the notes and the bonds. And so this typically is offloaded for the most part in this upcoming week, and it ends on Thursday. So I'm expecting to see some volatility between now and Thursday. So that's the big picture. In terms of our trade alert, we're risking very little. We can lose no more than 0.15 to pick up a gain of 1.3%. And so this allows us to lock in the nice gain of 1% total on the SPY trade so far in February and see what's going to come out this weekend. And we are seeing the governments tend to do the big data dumps over the weekend so they can try to mitigate problems in the stock market. Okay, I'm having trouble with my other monitor, so I can't see what's going on in the chat or anything like that. I'm gonna go ahead and go into Q&A now. And Dean, if you could read me any questions. I'm trying to figure out why my other monitor suddenly it's not displaying here.
Okay, yeah, just where do you want me to send it to you? Do you want me to send it to you in Telegram or?
No, just read any questions out loud and I can help.
Okay, so I believe this is the correct, but take a look. So step 1 would be buy to close February 7, 333 SPY call and sell to open February 7, 330 SPY put. And then step 2 is unaltered, but sell to open the February 10, 327 SPY call and buy to open February 10, 332 SPY put.
Yeah.
Got it. Okay,
So
cool.
we had the 335 SPY call, which we need to close. And then we need to sell to close the 330 put.
Okay, guys, it's posted in the chat for you. Sorry about that, guys.
And then there's our audit of the return. So the SPY went from 331.77 to 333.32 for a $1.55 return. The option caller cost 61 cents for our downside protection. were able to close that out for 0. So the net return was 94 cents a share. Now, if you're in the more advanced program, you are seeing the TLT start to bid today. I think GDX will follow. Again, the knee-jerk reaction to fear is to buy bonds first. Once those get fairly priced, then I would look for the big move in gold to trail right after. And also keep in mind, spot goes up first and then the miners pop up afterwards. So it's really the flow I'm looking for in terms of our long TLT, long GDX position.
So real quick, guys, if you're looking at this trade alert, you know, a lot of people when they first begin with this, they get confused, right? So the easiest way to, oh, there goes the screen.
Can you see it?
Oh yeah, I was just gonna walk people how you do the accounting. That seems to be the biggest thing that people have trouble understanding.
Sure. Okay, there's the accounting.
Right. So if you look at step 1, guys, or the first bullet in it, what you're going to do is look at, you know, the first price of the SPY, right? That's where we wrote the trade alert on Wednesday. Okay. It was at 331.77. Okay. And then today it's at 333.32. That's a gain of $1.55. Okay. Option caller initially cost us 61 cents to open and netted out to 0. So that subtracted 61%. So our insurance cost us 61%, but that's also what absolutely saves our butt if the market crashes, okay? So in this scenario, what we do is we just take that, you subtract your $1.55 gain from your insurance of 61 cents, okay? You end up with $94 per contract, okay? Or 94 cents a share, okay? And if you have the size of the portfolio we have, 1,900 shares, that equals a $1,786 profit from Wednesday to today.
Okay, great. Now let's walk them through the trade risk profile next, Dean. You want to walk them through this?
Yeah, absolutely. So guys, this is what Jason and I use to look at how we're going to engineer our next position, okay? So if you look, you're going to see the green part up here, okay? And you're going to see the red part down here in the bottom right corner. Does everyone see that? And you can see how we have our strikes. We got the 327 call and the 332 put up here. Okay. They're both February 10, 2020. So that's going to be our option strike date for Monday. Okay. So basically what we're anticipating, guys, is the market to travel down a little bit. Okay. From this period to next. And incredibly tight risk to reward ratio on this. Okay. And what were the exact numbers, Jay? It was 0.136 to, sorry, I'm trying to.
The risk reward. Yeah. So
Oh yeah. Beautiful. Yep. So guys, we're basically putting up 0.15% of our capital. Okay. To potentially make 1.3%. So we like to keep that just ultra tight, and especially in areas where we see higher amounts of volatility, but love to see those incredibly tight risk to reward ratios. For, you know, defensive investors like me, that makes my day when I see that.
yeah, and I don't like to do down bets on the SPY when we know the market's being so manipulated because they're trying to prevent fear. But my expectation is they're going to let the market sell off, do some bad news this weekend, sell the U.S. debt. Again, that's the notes and the bonds. That'll be cleared out by Thursday. And then I'm going to expect a huge jump back up on the SPY. So we're going to try to not replay what we did this week. We had nice profits this week. But again, they use the futures market to gap the SPY something like $3 up on Monday night, and then Tuesday night another $5 up. So while we had a great return, realizing that the central planners are really freaking out right now and they're using the futures market and massive money printing to try to prevent panic, we have to have that in mind with our trade alerts we design next week. So if we're wrong on this trade, we lose very, very, very little. But if we do capture this profit, I think we'll be very happy. And again, there's very few people who understand what's happening right now with China, with the cover up, with what the central banks are doing in the futures market. So if we can get just 1 out of 2 trades correct and keep our risk very minimal, I think we're going to have a very profitable set of trades coming out for the SPY in February. Now, I'm not expecting a big crash until we see the case count in the United States get well above 100, which at current pace would take 4 weeks. Now, if we get on a faster track to go over 100 cases, I'll be willing to get more aggressive. Also, if we start to see supply chains breaking down to US companies, because China is now, they've now locked down, let me pull up this article. China's not starting to open up. In fact, they're going the exact opposite direction. In my evening update, I'll cover this in more detail, but here's some of the. Yeah, just the cruise ships floating around the sea right now have far more infected patients that are not accounted for in this data. And they're all going to start popping up. And I think, but China now has 400 million people on lockdown as they just added Guangzhou, which is one of their biggest cities. So 400 million people are in quarantine, and that's just never been done in history. So this is certainly being glossed over by US media. You got Trump saying, oh, everything's fine, don't worry. Meanwhile, we have the government freaking out, trying to figure out how we're going to deal with this. But the big corporations don't want to shut down business and hurt earnings. So we're seeing potentially a travesty developing here. So it makes sense on Fridays through Mondays when we can see an obvious discrepancy between what should be reported and what's actually been reported, to expect they're just waiting till the market closes to give us that update. So again, if we're wrong, we lose extremely little. But if we're correct, we're now positioned with the SPY to deliver a profit if the market does travel lower. And again, if you are in our more advanced program, you'll also get to benefit from the TLT traveling higher. I'm going to go ahead and see if there's any questions. And in this one a little earlier, one of my 2 monitors went down, so I can't manage the webinar settings or even put it on my iPad. So I'll make sure to get a more detailed update this evening to everyone to cover some of the other news I had. But at this point, do we have any questions? Here's our profit loss on the SPY strategy so far in 2020. So hitting that 1% target early in February, this trade essentially locks in the profits we have picked up and gives us the potential to more than double it with a single trade. Now, do we see any questions out there, Dean? Sorry.
Yeah, Ron, you have your hand up. Go ahead, bud. And yes, it is. We are selling the February 10, 327 call. That is correct. And we're buying to open the February 10, 332 put.
Now, Oscar, did you get the same return as us?
All right, guys. And does anyone have any questions out there? Let's see here. New people, Michelle, Mac, Timothy, um, George, Randall. Any questions, guys, on how to get that in? Okay, cool. And Jason Tony posted this into the chat. He says, so with this position, we stand to make $453 per contract if the SPY goes below 327, or lose only 48 if it goes up per 100 shares.
Correct.
Great question, Tony.
Yeah, and so there's also another outcome, which we call the double payday. So let's just go through the language of what this call means. So we're selling the 327 call. That means we're essentially short the 327 call. We're willing to sell our shares of the SPY for $327 a share. But at the current moment, they're worth $333.32. So that's a $5.32 loss. So you got to ask yourself, why on earth would you agree to sell your shares for a loss, right? Well, wait a second. How much is the call option buyer willing to pay for that option? And it's more than we're losing. So that spread is the profit we could generate today, ignoring that 332 put. But let's just say we're wrong today. The SPY leaps $2, $3, $4 higher into new highs. Coronavirus is cured, who knows what, maybe just pure market manipulation. You're assigned. Well, you're going to get to keep the 643, which is, let's see, what's the difference on this? So to calculate the profit we can make on the long side of the trade, we take 333.32. Actually, we're going to take 327 and subtract 333.32. So we're going to lose $6.32 on being assigned, but we're picking up 643. So we'd actually make a small 10-cent profit if we're wrong and the SPY goes up significantly today to the point where you're assigned on Monday. So let's just say you're assigned on Monday, you go into cash. But then over the weekend, let's say on Sunday, all of a sudden they come out with a lot of negative news. Well, you're going to be long that 332 put. So we're in a situation where you could end up in cash on Monday and still own your put, and you'll have picked up a 10-cent profit from being assigned. Plus, you'll still be long your 332 put. So that could happen. More likely, what I expect is the SPY trades probably relatively flat today, maybe some downward pressure. After the close and through the weekend, they dramatically update the coronavirus impact, maybe a little bit of public announcements about this is a bigger risk than we've let on. And by Monday, I do expect to see a sell-off starting to begin. Again, this is all ahead of the US's notes and bonds it has to auction off, about $86 billion. Now, if there's no panic and everybody's rushing to buy stocks, the primary dealers in the US will have to pick up all of that debt. That's going to completely lock down all liquidity in the banking system, which means all of a sudden the stock market's in even more trouble because all the leveraged funds that rely on big loans from the banks will not have access to capital. So the government and the banking system is highly motivated next week to have a small mitigated sell-off in the SPY and in stocks in general to help sell its debt to foreigners. And if you've been hearing about repo madness for the last few months, that's the big problem in the US banking system, is that our debt levels are so significant. It has gobbled up every penny that our banks have, to the point that they can't afford to loan money to broker dealers, who then in turn loan money to hedge funds and retail investors. So there's so many reasons to play it safe and assume that at least next week, it'll be very difficult for the equities market to break into new highs. Now, if we do look at our risk graph, this is comes with each trade alert. You can see that we actually don't even break even. So we're basically locking in our maximum loss, placing the trade of about 56 bucks per contract, depending on where exactly the SPY was when you place the trade. We will break even at the 331.44 mark. And then as we go below there, the profits start to pile up. Now, like always, the call option represents where we want the SPY to travel to hit our maximum profit. So in this example, our maximum profit is achieved at the 327 SPY, where the call has been sold. So we do want it to sell off approximately $4, or rather $6.30. If it does that, we hit our maximum profit. Anything below that's perfectly fine, but we won't enjoy any extra profits. So bottom line is we need it to sell off below 331.44 to begin realizing profits, and we will stop realizing profits after it hits 327. Now, the worst case scenario is the market flies higher and we lose 56.50 per contract, which is tiny relative to the $33,000 you have owning the asset. So that's a potential loss of 0.15% and a potential maximum return of 1.3, which again could double our total return in February in a single trade. All right, any last questions out there? Sorry about the technical difficulties. I would like to be able to put my iPad on here, but for whatever reason, one of these monitors went dark on me, so I can't manage the Zoom platform right now.
Jason, you're doing a great job, bud.
Yeah, very simple. We've got a lot of debt to sell next week, and we probably have a big dump of negative news hitting the markets. So from that standpoint, it makes sense to play it defensive over the weekend.
All right, guys. Any questions so far on the trade? I know we have a ton of new people in here, so please, folks, jump in, ask questions. Please just feel free. Anyone out there, just unmute your microphone or type into the chat box. Love to address any questions you may have. And you know, guys, the more questions you ask, the more value you're going to receive from coming out today. So please feel free to ask. George, any questions for you, bud? I know you've been on here quite a few days in a row and appreciate that. Michelle, I know you're new. Thank you very much for joining us. Any questions at all, guys? And does everyone get this replicated in their account at this time? Whether it's using Real Capital or paper trade? Okay, Randall, any questions, bud? Ron, is that all cleared for you, bud? Does that all make sense? Looks like you have it all straightened out now. All right. Okay, I think everyone's good.
All right, great. Well, we'll have a very detailed update for you guys coming out this afternoon right at the market close. If you're on the boot camp, I have 3 really good videos. One is the house talking for 2 hours about how this is uncontrollable and they don't believe they can stop it from penetrating the US. So that's one. They're starting to talk about quarantine, shutting down schools. You have the House arguing why perhaps we should be doing quarantines and getting much more precautious, while you have these so-called health experts primarily complaining about their budget and then saying that they don't want to shut down anything because it wouldn't help, which is outrageous. The next video I have for you, if you're in the boot camp, is a big piece from Attorney General Barr, where he really lays out the risk against China, what their intentions are, why they're a primary enemy of the US. And so if you thought we're butting up with China, that is completely off. And then 3, a big piece on Ukraine, what was really going on in there. That this was broadcast live. Over 50,000 people watched live from Glenn Beck. A lot of revelations in that. So it's a good 4 hours of content for you to study this weekend. Meanwhile, Tuesday in the boot camp, rather than doing part 2 of the call options, I've decided to do a emergency review of module 2 and 3. We're going to go over how to short the Chinese currency, as well as how to short the Hong Kong dollar, which I think these trades could be very viable in the near future. We'll also review how to short their bond market, as it does look like this could be very crippling to China as they continue to contract, quarantine, and underreport the true situation. So I think this is going to be a much bigger impact on China than many are anticipating.
Okay,
All right,
hey,
guys.
Jason, and a couple questions came in. Let's see here. So Ron just said, yes, just seemed pretty deep in the money. He was just verifying the 327 call.
Was
Okay.
everybody able to sell that deep in the money call? When I was looking, there's about 100 contracts that had traded today. It's such a liquid market. I assumed you guys would be able to get it filled quite easily. Anyone have trouble filling that?
Yeah, no problem.
Yeah, it's such a liquid.
Yeah, no, it's instant.
But if you try to go that deep in the money on any other ETF, good luck. I mean, maybe, but not with this size of a following that we have.
Right. Okay, cool. Let's see here. Let's see. Oh, and then see, it looks like Tony asked, when is the SPY dividend?
I think it's in March. I did check that. We're nowhere near it, so we don't have to worry about losing our dividend.
Yeah, and Tony, if you do have, I can't remember if you have the pro system or not, but TL2 is going to pay its double dividend this month.
Yeah, if you're not following the full program yet, guys, and you're only on the SPY, this is a period of time we've had over the last 14 months periods of time where I was very confident in one asset class or the other, because the situation gets to a point where one asset is going to be reacting to the fundamental underlying news, and that's very easy to predict. And right now, that's the bond market. Now we know that the government wants to remove panic, and they're going to do everything in their power to keep the stock market calm. So that makes the stock market much harder to predict at this point in time relative to the TLT. So if you haven't gotten into the full program yet, I definitely would consider that, as the combination of the TLT and the SPY is really what makes life easy with this program. And now I know for a lot of you guys, we've had a couple months of drawdown on the TLT, but you can see no matter what the government does, trying to prop up the market, jumping it up $5 overnight in the futures market, it's not even putting a dent on the TLT, and we're seeing it start to catch up for us already today. So again, the combo is really powerful. And the basic idea is money is constantly flowing between bonds and stocks. It's this never-ending war. And so the balance of the portfolio being half in equities, half in bonds really takes the volatility out of your return.
Very nice. Okay, guys. Let's see here. Okay, Perry says, I'm in Colorado here with the family next week, so I may not be on live. What do you recommend to listen to for shorter time, or on shorter time boot camp?
Get your Interactive Brokers account ready, Perry. You need to get a little bit of probably, I forgot what size you're trading with us. It was like 300 to start, right? So you might want to get at least 10 over at Interactive Brokers so that you could at least take at least one contract with us to short the Chinese currency, which I think would be very lucrative trade. And again, what do I expect China to do to deal with this situation? Well, they're getting attacked in every front possible. Number one, the U.S. is continuing to apply pressure on their two national champions, which is Huawei and ZTE, because we fear that they will dominate the telecommunications industry. They already have 40% market share, and this is a number one threat for the U.S., which you'll learn in the weekend study. Two, they're facing massive inflation. That really puts handcuffs on their monetary policy because most strategies to deal with a slowdown in the economy create inflation. So they either face social unrest due to inflation, or they have problems in their stock market or their bond market, not to mention their real estate market. So they're facing epidemic, which is going to cause a huge slowdown. They have 500 million people in quarantine. Countries are all starting to, China is self-quarantined themselves, but now the entire world slowly but surely starting to quarantine China. So you can expect they're going to have to print a lot of money to try to keep their stock market from just crashing. They're going to try to cut rates to stimulate spending, which will be an easy play on their bond market. And then their currency is going to lose value as they continue to print and lower interest rates. That makes the relative value of their currency less and less. And then to make it worse, they have inflation. So if they get too crazy, all of a sudden food prices continue to go up and up. And now you get riots, social unrest. And that's actually their number one fear is losing control of the party. So China's got a lot of problems to solve in the next 3 months. And we'll be reviewing that head to toe Tuesday instead of the part 2 of the call options. I'll push that to the next week. So we'll have a module review Tuesday, and then we'll continue the call option lesson the following Tuesday.
Nice, Jason. And yeah, it was interesting to see the manufacturing hub of China go on quarantine today. That's nuts.
Yeah, this is.
I mean, that's the largest manufacturer in the world. The entire city just went on quarantine. That's wild.
These, they're turning every gymnasium, every school into, it's not a hospital. There's no oxygen tanks. There's no, there's one big, it's like a stadium. So these people are just getting piled into these buildings to either survive or die. And there's clips of people trying to escape. The police are mowing them down, shooting them down with bullets. It's awful. It's really a travesty. We don't know what caused this. Is it nature made? Is it man made? Whatever it is nasty. It's being underreported. And I think we're going to start to see this really hit the headlines this weekend and into next week.
Yep.
Which sinisterly aligns with when the U.S. government needs to sling $86 billion in debt that our central bank's not willing to pick up yet. So it's all aligning here.
Nice. And just to reiterate too, guys, that's part of why we're doing the inverted option collar. And we'll literally profit from today to Monday if we see the pain that we're expecting. So, not to tell you to make you worried, guys, but man, what you get to own your underlying assets and make money during the drop. I mean, what's better?
Yeah, we have basically no risk if we're wrong, but if we're correct, we'll double our February return in a single trade. And again, I suspect that we can place this trade probably Monday to Wednesday, but by Wednesday, I'm likely to go back to betting up because I expect after Thursday, we'll have completed selling the long-term debt for the U.S. government and then expect the futures market to gap it back up and prevent more panic.
Yep.
So we'll keep a close eye on it. A lot of it has to do with how bad this virus gets, how many cities get shut down, and when supply chains start to become affected by all of this.
Nice, Jason. And hey, guys, if you're not yet on the full system, this is a great time to add it to position into our risk-off assets because we're currently long those assets without any type of option strategy. So literally, we have a couple people that are either adding from the SPY system today to the full system, or a couple people that are just coming into the full system for the first time. And, it's just kind of made a lot of sense for them to grab the protection now, right, and the risk off, and then wait till next week, get a little bit of a sell off, and then pick up the 50% equity side that we're going to be net long.
And we'll probably add a TLT GDX put, or at least a TLT. Probably GDX is going to just trail. The knee-jerk reaction is always bonds. Bond is the biggest, safest asset in the world, especially US bonds. So I expect that to pop first, get to a fair value, and then we'll add a put option most likely on Thursday, expecting, again, a jump in the futures market overnight. So look for a potential put option to turn our long naked TLT position into a married put. And then GDX, as soon as we do see it have a big pop, I'll be willing to invest in a put to protect that gain as well. We haven't seen that yet. And again, think of the dominoes falling. First stocks fall, then the bonds rise, then GDX chases. That's the way I see these dominoes falling here.
Very nice. Any questions out there, folks? Henry, any questions from you, bud? I think you joined a little bit late. Any questions at all, though? Guys, and please don't be shy. Unmute your microphones. Jason, do you want to actually just maybe unmute everyone? See if we can get any last questions.
I could, for whatever reason, this monitor shows power, but it's just gone black on me, so I can't get access to any of my controls.
Oh, okay. You know what? Do you want to switch him back over to me for a second?
I don't have access to it. I can't even turn off the webinar.
Oh, no.
I know. It's just, I tried unplugging it. It didn't put all those controls back to the monitor that is working. So.
Right. Okay, cool.
Just gonna have to do a hard reboot here. And
okay, awesome. Awesome. Thanks for that too, Jason. All right, guys, any other questions out there? Okay, I see William, you got your hand raised. Go ahead, William. And you can just type into the chat box too, William, if you don't have a microphone. And Perry, hope you're enjoying your time in Steamboat Springs, Colorado, bud. Jealous. I love it up there. All right. Kathy, any other questions from you here? Perry, I wish I could, but I got a full schedule for the weekend. Thank you, though. You're too kind.
Kathy gets an A+ on attendance this week. Good job, Kathy.
Yep. And Kathy, did that risk to reward make sense? We actually went a little tighter even on the risk to reward. Did that make sense to you? So Kathy just got done, had a golf vacation. Her and her husband were there for a week. Let's see here. All right, guys. William, did you figure out how to use the chat button, bud? I see your hands up, so I don't want to not answer your question. And guys, please feel free to jump in with any questions you have. All right, Jason, and ES actually just broke back below its little volume pivot line too. So been watching that for a little bit.
Nice. Yeah, and by the way, guys, I really don't expect the sell-off to happen until the Monday open or the futures Sunday night. Because again, we're seeing a clear pattern. Big data dumps weekend. Any negative announcements always come at the market close. So they're doing their best to keep the stock market healthy. But to the public, Trump knows everybody. 99% of most retail investors who manage their own assets, at least, they're all in on stocks. So you never hear Trump talk about, making you a nice profit on your bond portfolio. All he brags about is the stock market's up so much. So again, there's two sides to the coin. To keep the stock market healthy, we have to keep the government deficit high. So we got to have these blowout deficits to even get, we barely got a 2.1% GDP print last year with $1 trillion US deficit. Now it's a little bit over $1 trillion this year. And so that is absolutely critical for having healthy growth in corporations to keep the job market strong. So what they don't publicize is, hey, we need to sell this US debt to foreigners to keep our banking system healthy so they can lend to hedge funds to keep the stock market so high. So that's the kind of the untold story. And so next week is a huge block of debt that is going to be sold and will certainly put pressure on the banking system, the stock market, and the bond market.
And Jason, we
oh,
did
go
have a couple more questions come in.
Great.
So let's see here. It's Ed said, my SPY was called away. Is it a good idea to buy the SPY back at this level?
With our trade, it is, yeah. Yeah, so with this trade, with the options, it doesn't matter what price the SPY is because we're designing trades that are directional and protected. Typically, we have at the worst case a 1-to-1 reward to risk ratio. So if you look at the way I've designed our trades, most of the time we're going to risk $1 to make $1. We're going to risk $2 to make $2. I'm never putting you in a position where we're going to risk, say, $3 to make $1. I'm never putting you in a situation where you might be risking $5 or $10 to make $1. So most of the time it'll be a 1-to-1 ratio of risk to reward. And that will be a very tight risk that we manage. So the goal here is to own the most important asset in the world, and that's the S&P 500, to be able to pull out safe profits from it, to get the benefits of the S&P 500, but to remove the tremendous risk. And that risk is something you guys have seen twice in the last 2 decades. And that's 30 to 50% crash in the value. Okay, so that's what we don't want to expose our account to. And by owning put options below, in this case, it's almost above the trading price, we can't lose. We can lose very, very, very little at any point in time because we always own a put. So the cost of that is we make less than just being an outright buy and hold investor in a bull market, but in a flat market or a sell-off, a recession, or a bear market, you'll see these put options are extremely valuable and they can deliver profits. Meanwhile, we're selling call options as an extra income source. So in this case, we have what I call an inverted option caller. That means we've sold a call option where the strike is below the trading price. So it's an in-the-money call option. Now, if I were a little more confident in this trade, I might have pushed the put option a few strikes up, but then our risk reward would have been significantly less. So if I see this is starting to sell off and the news is getting aggressive by Monday, you might see a little bit more aggressive trade on Monday. By Wednesday, most likely we will flip back to being long the SPY after we get past selling the US debt. But yeah, it's super safe to buy the SPY at any time, at any price, if you follow our trade alert immediately after. And that's simply because you own 1 put per block of 100 shares of the SPY. And in doing so, you eliminate risk.
Yeah, great question, Ed. And then let's see here. William McNeely said, I am trading my IRA and have 18,000 not being used. Any suggestions? My mic was open, and so recorded a bunch of gibberish.
TLT. Do you have access to the TLT? And are you able to do the options? But yeah, in general, guys, a lot of people like to ask me that, you know, I got some extra cash, where should I put it? Well, my answer is follow the system. So it's 100 shares of the SPY, 200 shares of the TLT. Okay, that's the base of the whole program. From there, if you want a little extra potential return, a little extra alpha, Then you add in 200 shares of emerging markets, again, on Tuesday only, so you can follow the trade. We're betting, we have the same bet that you see here on emerging markets currently. And then on Thursday, you could add in your GDX. So it's very easy. It's 100 shares of the SPY to 200 shares of the other 3 assets. And so you want to evenly, think of Monopoly. You don't just go put a hotel on one of the, on Park Place and leave Boardwalk empty. No, you have to put 1 house on each property and then put 2 houses on each property, then put 3 houses and slowly build up evenly. So the system's designed to take advantage of the relationship between the stock and the bond market. And again, I would go review module 1 in our boot camp to thoroughly understand the relationship between bonds and stocks. Once you understand that, you can start to get the big picture and realize why you need to have the proper ratios of these 2 core assets. But yeah, if you're behind on any one of those 4 positions, I would build into it and then think of Monopoly. We got to put 1 house on each property at a time, then go put 2, and then put 3 until you get to the hotel.
Yep, exactly. And then by owning any of the ETFs that we have, guys, whether you're on the SPY system or you're in the Pro system, they're literally all going to pay you a dividend. So while you're talking about Monopoly, Jay, it's like going in the utility too, right? And it's just ETFs are so cool because you mitigate the business risk, right? You're going to get paid a dividend. And then all we have to do is watch the financial system. And guys, you don't have to do that. Jason and I are going to do that for you. I mean, really, you guys just sit back, relax, enjoy. But a lot of our clients really like to get as much information on the financial system as they possibly can. So, a lot of people will end up doing the boot camp as well. But yeah, guys, just such a good idea to own ETFs. I mean, they're the reason why so many hedge funds are going out of business. And, if you have cash on the sidelines, put it to work.
Yeah, whatever you do, don't leave it in cash.
Yeah, we're going through some examples, Jason. So, and while I have you real quick, I was looking. So in 2019, Schiller Case Index was showing 7.8% increase in residential medium home price across the United States. So 2% inflation, hilarious.
Yeah.
And then over the past decade, it was 3.588%. But yeah, last year alone it was up 7.8%. Just amazing. So yeah, guys, cash is trash. Get it working for you. And William, one thing you could do with your IRA, okay, is you could take that 18,000 and let me just do the math for you really quick. Okay, so let's take 18,000. And then I'm going to multiply that times 0.40, right? So it's 40%. So yeah, you could buy 7,200 worth of TLT today. Okay. 7,200 worth of, and maybe I would wait till next week to do this, but I'd buy $7,200 worth of, so $7,200 worth of TLT. Okay, and then take the other, would that be $1,800? Buy GDX with it. After we see the pain of the liquidation of the financial system and the treasury notes next week, right? Add your shares of SPY and EEM with your other 9,000. So yeah, with 18,000, I mean, add the TLT GDX today with the 9,000, right? And then next week after we get that little dip, add SPY and EEM into it as well. And then, so that would basically show you the buy and hold formula that we have. But fantastic to use for, anyone that has under the minimum threshold to do the SPY system. All right. Any other questions? Henry, do you have any questions out there, bud? Thank you very much for joining us here.
Did we get Ash in today? I know he was taking the trade.
No, I didn't see Ash today. Okay, and William, I'm just writing that those instructions in here for you in the chat box too. Okay, all right. Ron, it looks like your hand's up, bud. Do you still have a question? And go ahead and type into the chat box. Sorry, we had some technical difficulties today with the monitor failure, so my bad.
Yeah, I don't know. It's turning on and off. It just won't connect. So we'll have that fixed by Monday.
Okay, George, questions, guys? And William, does that all make sense for you to allocate to that 18,000? Okay, and William says he has 200 shares of TLT, 200 shares of GEDX. Okay, and let's see. Oh, got a bunch of stuff. Oh, 200 shares of EEM and 100 shares of SPY. Okay. So yeah, William, since it's in two different accounts, you know, and that'd be a good way to kind of split test the buy and hold system opposed to the pro system. But yeah, if you only have the 18,000 in that account, it won't allow you to use the option protection. So you could just use, like I said, the 7.2K in TLT today, 1.8K in GDX. Okay. And then next week, once we see that liquidation of our notes, then pick up the 7.2 of SPY, 1.8 of EEM. Just with there, because you don't have the ability to trade options. If you said, hey, I'm going to allocate another 180,000 today, I'd say, look, just pick up the entire thing, pick up SPY and wrap the options around it. But since you don't have that ability because of the capital limitations, that's going to be your best bet for that 18K. Okay, cool. Yeah, and you have the proper allocations in the IRA account, so good job. Okay. Okay, and Ron asked about someone's SPY being called away. Yeah, it couldn't have been today, Ron. It happens overnight. It happens at midnight Eastern, and it's done by a clearinghouse. So it's not possible for it to happen today. Okay, cool. Yep. Oh, the extra 1,800 is in the same account. Let's see here. Okay, sorry, William. I thought it was in a separate account.
Could do the GDX if he's low on that one.
Yeah, he's got an equal balance. Yeah, it's kind of tough. Well, William, are you in the boot camp too? Okay. I was gonna say, if you wanted to, you could allocate it to the extra trades in the boot camp as well. Getting ready to short the Chinese currency there, and then we have a couple juicy option trades we put out in high probability scenarios. But yeah, I mean, if you're doing the full system, I'd wait till you get up to the full extra tranche to put to work. Or join the boot camp and follow our option specific trades in there that have done incredibly well. Okay, GVOS says, if you have 5 different accounts, how do you manage them? So George, just like we talked about the other day, I would just do the buy and hold scenario because of you have everything separated into so many different accounts. I think that's your best bet. And with the capital allocation you have going into the markets, I think that would just be kind of dead on your best scenario.
What Murray's doing is he is using one account per ETF. So that's another good strategy. So you'd only use one account for the SPY, another account for the TLT, another account for GDX, and another for the emerging markets. And that way you're not trying to run the whole system on 5 separate accounts. Does that make sense? Depending on how much the fellow I know doing that's trading about $1 million with our service.
Right. So with George J, he had about a little over 100, I think. So yeah, I was telling him, and he has about 10 years to go that he's still working. So it'd probably make the best sense to do the buy and hold across the 5 accounts, George. Okay, cool. Yeah, call me, George. After we get done here, we'll set you up and we'll do that custom allocation for you. Okay. Okay, cool. My pleasure, George. William says I can't add to the IRA as I'm over 70. Okay. Yeah, and William, you wouldn't need to add to the IRA if you were going to follow the boot camp trades. You would just use the capital you already have in there. Okay. Let's see here. Perry says interactive brokers for currency. How about crypto if I'm opening accounts? So Jason, you want to handle that one, bud? He's already got interactive for currency, but how about crypto?
Sure. So yeah, we've been recommending crypto since December of 2018 when it was at 3,500, and I still like crypto. My son is up. He is one happy little camper with the big bounce in crypto this week. I think he's probably the only 6th grader who's got as much finance savvy as. But yeah, I do like crypto. It's the same play as gold, and in general, what we want to see is, I guess from your point, you might be just wondering where to get the crypto. I like Coinbase. But again, our recommendation is 1% in Bitcoin, 1% in Ethereum. And I actually just told my son to push into, to take a little profit as it is going up rapidly. He's putting a little into Ripple. And then we're probably going to look at EOS and also Binance coin. So Binance is a huge cryptocurrency dealer, and they have one coin that represents the profits of their company. So it's kind of like an ETF cryptocurrency, which is nice. But again, we're recommending super, super small allocations into cryptocurrencies. And the bottom line is, if you believe there is room for the Fed to cut rates and to print more money, and that there's a potential crisis between either governments or confiscation of capital, that's what drives money into this black market. That's really what the cryptocurrency world is. It's a black market for trying to hide money from your government. And so if you believe that governments are going to be in a period of cutting interest rates and trying to keep their stock markets healthy and their bond markets, keep their governments funded because they're creating deficits, that's a good reason to own both gold as well as cryptocurrencies. So if you notice our GDX position's a little bit under the real 10% when you compare its cost to, say, emerging markets. The reason I don't highlight that every day is most of our investors don't want to mess with crypto. But right now, that allocation of a 200 shares of GDX is more like 8%. So it leaves you a little spare cash to go pick up the 1% in Bitcoin and the 1% in Ethereum. My best guess is we will be cutting rates for all of 2020, potentially into 2021. They're going to do it as slowly as they can get away with, but they do follow the actions of China. China is almost certainly going to cut rates by at least 1%. And they're starting from a higher level, so China can actually cut more than we can if they want to. But again, they're fighting massive, massive inflation, which is really a big problem when you have 1 billion people to feed and house. So they're really stuck. But what's being indicated by the Bank of Nomura, or it's a hedge fund in Japan, it's huge. They're extremely accurate. They're predicting a 1% rate cut in the very near future for China. And usually the Fed will just copycat after the fact what China's doing to keep a competitive edge, but to also not have our interest rates too high. So we need to keep interest rates high enough to attract foreign capital. And that's really just relative to what other governments are trying to get for their debt. So the big picture is, yeah, I think we have at least a year of rate cuts. After that, you could expect probably 1 to 3 years of quantitative easing. And then we're probably going to start hitting the Fed's 2% symmetrical objective of this, this BS inflation target that they have. And that's when we got to worry about crypto and gold, because the next set of moves will be to get through this crisis, which again involves cutting rates first, stabilize spending, stabilize your corporate sector, stabilize your job market. After that, that gets stocks back into a healthy trend. Who's in trouble next? Well, your government's in trouble, because now everybody wants to buy up equities and they don't see any future profits to be made flipping the debt. So that's when QE comes in. It saves the government. And now stock market is completely on fire because the money supply is increasing. So that's usually the playbook. They rarely don't follow that exact playbook. And with this crisis looking worse and worse by the moment, the amount of rate cuts could be quite tremendous this year. Now, if this starts to reverse course, looks like things are getting better, then it'll be the opposite problem. But for now, I think we can expect rate cuts and QE for the next 2 to 3 years. So that does give us a pretty significant runway on gold and cryptocurrencies, with almost no reason to sell at any point until we start to see the Fed's, magic symmetrical inflation rate. Now, they're also saying that they don't want to just get 2% inflation. They want symmetrical inflation. So for all of the years that we've been under 2, they want to overshoot it. So the average comes out at 2%. The last time we did stuff like this was from the 1950s through the 1970s. It's just exactly the same thing repeating itself. We ended up in a situation where we had runaway inflation for the better part of a decade, and the Fed had to hike rates to levels that are just unheard of. Now, it got all the misallocation of capital out of the economy. It's probably the healthiest thing that could have ever happened to America. Good old Paul Volcker. We'll see what government official, it's going to take the government plus the banks teaming up to accomplish this. And they probably won't do it until we really have some serious inflationary pain. That's just too hard to ignore. So my expectation is you do have at least 2 to 3 year runway on gold and crypto. Now, the other thing coming out of the Fed, which is mysterious, no one really knows what the hell they're talking about. They're supposed to release this summer, is a new framework for how they're going to create inflation. So right now, they just flip up and down the cost of money through the federal funds rate. And then they screw around with buying up debt from the government to help support the bond market, which in turn relieves pressure in the financial system. And you see a bunch of money flow into equities. So that's really the only 2 tools they have right now. And it's essentially very lucrative for 2 people, banks and the owners of corporations. And the problem is it's been circumventing getting capital down to the bottom of the economy so it can be spent and actually create this inflation that they want. Now, why in the hell do they want inflation? Why wouldn't we want the cost of goods to go down? Well, with the current capital structure, if we had a system where you believed if you didn't make the purchase today and you waited a while, that the cost of that good would go down, are you going to make any purchases today? No, you're going to wait. So what would happen if everybody decided to wait to make a purchase today so that they could save money tomorrow? Well, do you think you're going to have a healthy GDP print that month? Absolutely not. So that's their reasoning. When we look at the real cost of goods and we say, oh, it's only 2% inflation. Well, most of the goods we're buying today, the actual cost of production has dropped like 99%. Look at a can of Bud Light. Do you really think the cost today is the same as it was 10 years ago? No, they can make those for a fraction of a penny now. Are those cost savings being passed along to consumers? No, they're being passed along to shareholders who own these companies. So the whole system's designed to deliver profits, to build big corporations, and to globalize production. And so from that perspective, we've taken a lot of people out of poverty, and the world's efficiencies and innovations have just been explosive. But what's the cost? Well, the cost is that we're not passing along savings to consumers. So then you get to your big debate. So I'm not going to get into all that today. If you really want to go down the bunny hole and understand this, our boot camp does a good job at that. But bottom line is, if the stock market's in trouble, Fed cuts rates. If the debt of the government's in trouble, they do QE. They like to keep the job market healthy first and foremost. And that's what they'll talk about to the public, because most people just own equities. And then they'll keep the government debt sold as the second most important goal for the government. And so that's really the two things to understand. And if you put your portfolio so you're half equities, half bonds, it really makes your life a lot easier. Until we get to 0% federal funds rate, and then and then the whole thing really doesn't work with how they've designed this. And we're getting near that point. So another good reason to keep up with our program here. Any last questions out there that you can see, Dean?
No, I don't see any this time, guys. All right, team. Thank you very much for your time today. Hope you enjoyed the education we provided. And if you have any additional questions before you get started, just call me 505-322-7515. Look forward to helping you all grow your capital in the safest manner possible. Thank you very much for your time.
Thank you.
Thanks all. See you Monday.